Hi, welcome everyone to another Collateral Onboarding call. This one's edition number 20. Today I'm joined by Mona Lisa from Melon Protocol. She'll be giving us a brief description and overview of what Melon Protocol is, what's coming in the version 2, I think it is. DAI in Melon, and yeah, again, as always, feel free to interrupt with questions. And yeah, Mona, if you do the honors.
Hey guys, yeah, sure. So really excited to talk to you guys today a little bit about V2 and actually the increasingly large role that DAI will play in V2 as well. I think maybe we'll just take a quick moment to do the basics on what Melon is, and then talk about our personal journey from V1 to V2, which has been quite a learning process. I'll talk about some of the features and especially how we're making more and more use of DAI with V2. I'm gonna maybe touch on a little bit this announcement we made yesterday with Rari migrating to Melon. And then, yeah, and then maybe just kind of touch on the rebrand. I don't know if you guys know this, but we're gonna be rebranding Melon this week actually, like tomorrow probably. Because of the kind of ongoing, well, it was triggered by the ongoing trademark battle we have going with BNY Melon at the moment. So I'll try and touch on all those subjects. So like maybe just to begin, a quick kind of summary on what is Melon. So I guess for those of you who don't know, Melon, it's an on-chain, completely decentralized on-chain asset management protocol. And the idea is that it's primarily designed to solve a problem that exists in the asset management industry, which is extremely high barriers to entry. It's extremely expensive for anyone to set up a fund in traditional finance. It's extremely complicated. It usually takes months, lots of kind of research and service provider interviews, etc., which obviously also add up in cost. And it's extremely draining process. Usually people who set up a fund just want to invest and focus on what they love doing, and they end up, you know, in this kind of extremely complex and draining process. So what we set out to do was back in 2016 when I co-founded Melon. The vision really was that, or the realization, the assumption that we made was that all assets will be tokenized. It was quite a big bet to make in 2016 because, you know, DeFi was very young in its infancy. Like apart from Maker and Augur, there wasn't anything else really at that time. If everything is tokenized, then we can now automate the operational and administrative processes that add up in terms of cost, energy, and time. So the solution Melon has enables managers and their investors to have extremely cheap solutions to set up investment strategies or products. It's extremely simple. You can just, you know, interact with our interface to put together the different rule sets or the different customized modules you want to create your product in a few moments. And it empowers the manager and their investors to focus on what they really are passionate about doing, which is investing ultimately. And like all DeFi protocols, there's this idea of the trustlessness, which we're really big on. And with Melon, the idea is that as much as possible, we try to, through the smart contracts, we try to establish trust between the fund manager and the investors in the fund. In the same way that with the Maker protocol, for example, you're establishing trust between borrowers and lenders through smart contracts. We do the same, but with managers and their investors. So yeah, so how did we do? So I guess like V1 was launched in February 2019, and we also decentralized the protocol back then. If I look back on the last year and a half, I would say that we probably learned a lot of lessons in kind of the V1 launch. So I'm not sure if any of you have actually tried it, but the first kind of release had a really terrible UX. It was almost impossible to use, I would say, and very like heavy friction. And you know, we'd kind of focus a lot of our energy on the smart contracts back then, but we really let the experience really kind of, you know, almost disengaged people immediately.
Mona, when you said that you decentralize the protocol, what do you mean exactly?
Yeah, so actually that's a great question. So our governance model basically is, I think, a bit different than some of the other DeFi governance protocols we have. It's a council-based approach. So basically, in order to be on the council, you have to be either extremely technically skilled and familiar with the Melon protocol, or you have to be a user representative. So if you're, so Melonport, the company that built V1 before kind of liquidating or winding down, it kind of assigned the first technical council. And from that point onwards, the council grows organically through consensus. So the initial starting council was made up of various auditors in the space, or smart contract experts, or formal verification experts. And we didn't have the user representatives to begin with, because the users were non-existent at the beginning. And we only layered in the user representatives recently. And we also started to increase the size of the council recently. We added 4 new members. I think it was in March or April this year, maybe May even. Yeah, and I think the new additions have been really great. So for us, it's a consortium-based like governance, and the governance have the sort of council members have 3 functions. They can that every year the protocol can mint a certain number of tokens, and the council can allocate those tokens to projects building on Melon. It can upgrade the contracts through consensus, and it can adjust the network parameters. So we have a kind of fee-based model, and the council can adjust the fees in the case of exchange rate volatility and stuff.
Nice.
So
Can
yeah.
you give an example? Sorry if I'm interrupting too much, Mona. You can tell me to back off for a couple of minutes. Can you give an example of a project or something that's built on top of Melon? Is there such a thing yet, or?
Yeah, there's a few. I would say like there's nothing. Actually, there is. So there's a few. So one of the early projects was Gorilla Funds. That they're basically just building a cool interface which enables manager to launch their own web page and customize it. Because right now on our interface, you would just have all the funds. If you want your own kind of dedicated website, you can use Gorilla Funds. There's a project in stealth mode, which I think actually are going into testnet tomorrow, called Unslash. They're an insurance protocol that need asset management functionality, and they've been building on at least the asset management component on Melon. Rari, as of yesterday, we'll talk about that later, but how it will be migrating to Melon and initially building alongside us, but the goal would be that they will eventually focus more on product. And we had Ash at the beginning, Ash Finance, although they've currently paused due to some funding restraints, but they were initially building kind of a gamification, like, you know, kind of battle of the fund managers games, game application. But unfortunately that was paused recently due to other reasons. So so the ecosystem is growing. I think if I'm really honest, like going back to V1 criticisms, I think that the code base wasn't you know, extremely developer friendly, and also the documentation wasn't. I think that we've addressed and fixed a lot of those problems with V2, and hopefully we see a lot more projects building on Melon. I should also say one other team I forgot to mention was I don't think they have a name as a team, but Emiliano Bonassi and Simone Conti have contributed, for example, the synthetics module recently, and they continue to be interested in contributing other projects as well. So yeah, we've seen it's been slow, but I think that given the like say, I think with V2 it will accelerate because the documentation on the state of the code base is a lot more organized and easier to navigate.
Nice.
Cool. So yeah, so other lessons. So just feel free to interrupt anytime. It's great to have questions. So yeah, the other kind of another lesson we learned was the smart contract architecture was more rigid than we would have liked, and we realized this when we started to see new kinds of DeFi protocols explode last year. And our kind of architecture was designed that we could only integrate a certain type of protocol, but now, you know, you were starting to get all these kind of different models of DeFi protocols that we were not equipped. So this is something we have addressed in V2 by re-architecting it basically from the ground up and making it extremely more modular and flexible. We kind of see it now as like layers of an onion. We have the persistent state, which the goal of the persistent state is it pretty much never changes. The release state, which changes with release if you upgrade, and the adapter state, which is where you connect with other protocols. And the adapters are built in such a way now which they're much more flexible, and they can handle integrations with all sorts of DeFi protocols, which will enable us to integrate much faster in 2021 with the rest of the space. So yeah, so that's something that held us back in terms of integrations for V1. Another big problem we had with users was that because our contracts were not upgradable by users, people were reluctant to launch large projects and products on them, because if you can imagine launching a fund, for example, on Melon V1, and then we release new features with V2, they have to shut down the fund. All their investors have to redeem, and then they have to relaunch on V2, and then the investors have to reinvest. And it created a bit of a UX nightmare. So we did a lot of research earlier in the year in upgradability patterns, and with because of the new architecture, we're also able to implement the upgradability patterns in a nice way, so that users can now upgrade between releases and access new features. The fourth problem we faced, I think everyone faced, which was that in July, August, we really suffered from the extremely high gas fees. And it made us realize that we really had to completely ruthlessly re-scrutinize our contracts like over and over again and make sure they're as lean and slim as possible. And I think we really achieved that. Like in V2, like we have managed to reduce gas costs and fund setup by a kind of 1/40th of what they were before in V1. And we really had to question every line of the code and wonder whether it really needed to be in there, or whether it didn't, you know, did it really need to be in a smart contract or not. And the last was that the user interface was just not intuitive. We never had a UI kind of designer working in-house, and we've fixed that now as well. So yeah, so with V2, like in terms of how we've kind of changed things, it's much more flexible. We've, like I said, we re-architected everything, so it's a much more modular approach, which allows for upgradability. As a team, as an ecosystem, we have a much more integrated workflow, whereas before, I think the smart contract team and the front end team used to work kind of almost in isolation. Now the workflow is much more integrated, and as a result, we can fix you know, UX UI problems in the front end that need fixes on the smart contracts almost on a live basis. We have a much lighter code base, which should enable much faster and much cheaper contracts and user experience. And for the first time in our history, we also hired an experienced UI designer who was helping us also rebuild the interface. So we have yeah, so kind of like from lessons learned, that's what we learned and that's what we applied. And I guess like in terms of features and what can be expected from V2 that's not already in V1. Yeah.
I think it was just an unmute microphone. Sorry, Mona.
No problem. So yeah, so in terms of features and what to expect, like in V1, we had an asset universe of about 14 assets, and we were reluctant to grow it too fast beyond that, because we didn't have the confidence in terms of being able to handle kind of other assets with the price feed that we were working with. And so as a result, we kind of controlled that asset universe, and we had an architecture which was very rigid in terms of adding new assets. What we're doing with V2 is moving away from being the ones who select the price feed, and actually ultimately allowing the user, the end user, to select which price feed they want to integrate into their fund when they launch the fund. Having said that, the first integration in terms of price feed that we will provide is Chainlink, but we also plan to integrate other options in future. And we've actually looked at the Maker price feed, for example, and where actually was one of our favorites, but it just was a bit restrictive for the first one because one of the biggest, in terms of the asset universe, because one of the biggest pushbacks we had from users is they wanted a bigger asset universe, and Chainlink had the biggest variety of assets that we could offer. So, but the idea going forward is that it's not one price feed we rely on, but it's actually you slot in the price feed you want. So we are going to go from 14 assets to well over 100 assets with V2, which should really please users, I hope. The second thing, which I think is probably interesting for this community, is that previously all our funds were denominated in ETH. And if you think about how a fund runs, usually fund managers charge a management fee, which is like a time-based fee. And it's irrelevant or independent of your performance. And they also charge a performance fee, which is they charge a percentage of your profits. They take it as like a kind of incentive fee. And because all of our funds were denominated against ETH, and as you know, especially last year, it's very hard to outperform ETH. A lot of managers weren't too happy because they put in a lot of work to try and manage a fund, but at the end of the day, they always performed well against USD or DAI, but they were receiving their fees against ETH. So what we have done with V2 is enabled people to decide when they're setting up their fund which currency they want to benchmark their performance against. And we believe that one of the most popular denominations that will be called for is DAI, like DAI-based funds. And speaking to users, of course, USDC and USDT are in demand as well, but there's always that risk, that kind of that they are definitely much more custodial. They're custodial, and they come with their own risks. So we think that DAI-denominated funds will be like a huge use case for Melon V2, and we and our users are very excited about it. So yeah, that's the second thing. The third thing is we're going to be able to support lending protocols for the first time. So we will be integrated with Chai because we have seen a lot of demand for the lending protocols, also be integrated with other lending protocols. Another feature is that we'll be able to provide, from a fund, you'll be able to provide liquidity to automated market makers like Uniswap pools. So yeah, if you're a market maker, you could actually use a Melon fund to, manage different pools and prove your track record on chain through a Melon fund. So it will track your performance, obviously. And if you're good at it, then you may attract more investors into your fund. We also have aggregated liquidity for the first time. So in V1, we were integrated with all the DEXs, but we didn't have the aggregator layer on top, which is difficult for people who need, who want good pricing or want to save on gas. And with V2, we will have aggregator, which will be able to give people much better execution and also much lower fees. Another cool feature that we're excited about is that you will be able to delegate trading from a fund to either a bot or a strategy or something else. So previously it was only the manager who could manage the fund, and now you can delegate to a third party. And yeah, I think I touched on it really briefly, but also just like last week, we announced we'll also have just completed the synthetics integration together with I like to call them the DeFi Italy team, but the Emiliano and Simone who helped with that. Yeah, we managed to slot it into the audit in time as well. Like it will be audited last, but it will make it, I think, into the V2 release. So yeah.
Mona, when you mean that it could be delegated to a bot, would that be a bot that's trading on indicators like RSI or something like that, or is it?
It could be anything, actually. Yeah, it could be anything. We actually have written a blog. Aaron on my team has written a great blog on how to build a Melon bot using JavaScript. And you could pretty much write any strategy you want and have it kind of being implemented on the Melon protocol just by writing it in JavaScript. So there's a great blog post about that on the Melon protocol blog Medium page if you want to check it out.
How often is I'm going a little bit crazy here, but how often is the data updated? Like, could you do some high frequency potentially, or is it every couple seconds or blocks?
So when you say data, you mean for like the fund data, like the price data, you mean, of the assets?
Yeah, we're thinking about the price plus the bots and their execution speed.
Yeah, so Chainlink, the way Chainlink works with updating price feeds is there's like you choose depending on the volatility of the asset, you choose like I'm losing the word, not a bandwidth, but a slippage rate, I guess, of how like so the price doesn't update. So if your slippage rate is 1.5% bid ask, it will only update if it exceeds that bid ask. So it's not a time-based update, it's a volatility-based update. And I think that if there's something called a pulse, like if it doesn't update within 24 hours for whatever reason, then it automatically just updates after that time interval as well. So so in theory, it's as long as you can deal with as long as you're aware that of the slippage, let's call it slippage. It's not exactly the word I was looking for, but as long as you're aware of the slippage that is possible with the assets you're trading, and you can look that all up on the Chainlink documentation. Some assets, for example, stable coins have much lower slippage, and the more volatile ones obviously have a wider
spread is the word you're looking for.
Spread, I guess, yeah. They call it something else, but I'm just losing the word. And but yeah, spread. Let's call it a spread. But if the spread is like, if they are restricted like all Oracle, like all oracles are, they're restricted by the cost of publishing on chain, right? So the more volatile an asset is, the more times it needs to be published, the price on chain. And so typically what you see is the more volatile assets require more price updates. So the way they resolve that is they just give it a wider spread, and users just have to be aware of that and take the risks that come with that, or they should not use those assets. So to answer your question, I'm sorry, I don't know who asked it. But yeah, to answer.
It was Alexis, I think.
Okay, yeah, Alexis, yeah. So to answer your question, from our side, you could do it as often as the blockchain will let you. Like you can't go ultra high frequency just because I think gas costs and natural block times will prevent you from being ultra high frequency. But there's nothing to stop you other than that limitation. Otherwise, the blockchain limitation and the Chainlink limitation.
Yeah, sorry. Thanks very much. I was just I was looking about your website and try to find the GitHub. Sorry, I was just about to ask for it.
Yeah, actually, the GitHub. Yeah, so I'm gonna get to that, but you won't find the GitHub under Melon Protocol because we're about to rebrand and we've already renamed the Git.
There's a link, and I click on it and I say, "Well, that doesn't look like the good one."
Yeah, we should add a label there, but we just did that a couple of days ago to prepare for the rebrand. That you will find it under Enzyme Protocol.
Okay.
And you won't see V2 there yet. V2 will be released open sourced in like a week or two.
Okay, thank you.
Yeah.
And it doesn't. So all of the data are not from the main net. They are somewhere, I don't know where, because when you load the page, you don't need to sign or anything, I guess.
Okay. Sorry, when you load which page?
Melon Avant-Garde Finance. mainnet?
No, the data. Yeah. So the data actually, the data on the, like, if you go to like any fund price chart or anything from the interface,
Yeah.
you'll see the dots on the chart, and those are the on-chain prices. And then you'll see, because they update every 24 hours roughly.
Okay.
And then you'll see the line in between. That's a centralized, we get that from Crypto Compare. And we just use that to give like
Okay. Yes.
the full picture. But the data is definitely all tracked on chain. And if you want to see the
Yeah. Sorry,
proof of
I
it,
didn't see the login actually. Sorry.
yeah, no worries, no worries. If you want to see the proof of the data, that we have a great subgraph. And where you can kind of query all the data. And we also have a monitoring tool where you can look up stuff, which is just a visualization of the subgraph basically. And that's melon.monitoring, oh shoot, I forgot the name, monitoring.melon.network.
Thank you.
And Mona, how do you think of DeFi and other L1s, right? So someone like you, a founder, do you think about other L1s, or do you just think everything in DeFi is happening in Ethereum and we're just going to focus on this? So what's your approach there?
I didn't hear the word. Do I think about other what? Sorry.
L1s, like other
L1s. Yeah.
Yeah. Sorry.
Yeah. Yeah, we keep an eye on them, but I wouldn't say that we're very close, for example, to the Polkadot team. We're very close to the Near team. We're very close to a lot of the teams actually building in the space, but in the L1 space. But I wouldn't say that we're actively looking to move to any other chain. Like at the moment, it's still not given that any of them can offer more than what Ethereum can offer. And until we're certain that something can, then we're not looking. I mean, we are an asset management protocol after all, so we need assets to manage. So we're not going to be the leader in terms of moving to another layer one solution. We have definitely had our frustrations with Ethereum. I'm sure everyone has. But I can't see a better alternative, or we can't see a better alternative that's obvious right now. But we're definitely keeping an eye on the space, of course. I mean, some of the recent, announcements have been interesting, but still, I wouldn't say they have been proven yet.
Yeah, that makes sense. And maybe someone already asked, or you already spoke about it, but can you give us a comparison of what traditionally it would cost for one of us to set up a fund through the traditional way, right, down at Wall Street, versus doing it with Melon?
Yeah, sure. Yeah, so it's I actually tried to set up a fund before getting into blockchain, because I did 14 years in traditional finance, like trading and managing people's money. In my last year, I tried to set up a fund, so I actually have this experience firsthand. And the initial cost to set up is somewhere between $75,000 to $100,000 all in. And then there is a recurring cost of between $50,000 to $75,000 per year. And I think with Melon, V2, I'm going to take out V1 from the equation because July, August with high gas price ruined it a bit for us. But with V2, I think setting up a fund will be close to nothing, like probably $20, $30 max of Ethereum gas mainly. And the recurring kind of fees will be, it depends, of course, how often you trade per year. But so that's really the biggest factor. But the recurring cost shouldn't be more than $1,000 or $2,000 a year if you trade quite a lot.
And then I guess the administrative cost though would be a little different, right? And it also depends on what part of the world you're in, I guess.
Well, no, so that's the whole point. So Melon actually disrupts the administrator part of it, just drops that you don't need operations, you don't need the administrator, because the protocol calculates the NAV automatically. It can be audited on chain. You can prove that the NAV is what it is by, because all of the data, we have it on chain. It calculates the management and performance fees. It automates the investments and redemptions. It, you know, you can, if you customize your fund, it has certain rule sets, like the manager is only allowed to do X, Y, Z. Then you can build those into the contract, or you can build those into your fund using our contracts, and that will prevent, like almost like risk management policies. They will be prevented upfront, so you don't even need someone to check that, because the smart contracts implement those rules for you. So like, for example, if we take like a US equities example and we say like, I'm launching a fund on Melon and I'm only allowed to trade US equity tokens, for example, you guys all invest in my fund on the basis that I'm some kind of US equity token expert, right? So you backing my knowledge there. But you want some assurance that I can't go and invest in Nigerian real estate, because that's not what you, if you wanted to buy Nigerian real estate, you probably wouldn't go to me because I have no experience in that. So you insist on making sure that I have a rule set with a whitelist of you know, assets I can invest in, and those are all US based, you know, equity tokens or whatever.
Super
So
cool.
if I then try to buy anything else, the protocol will reject. Yeah. So you can restrict from like maximum concentration. So position sizes, you can say Mona can't take a position size more than 5% of AUM. You can restrict things like number of positions. You can restrict, you can even restrict who can invest and who can't. We have a whitelist policy. You can restrict anything you want, basically. We haven't written all the policies, obviously, because they're infinite. But yeah, you can, we have quite a few policies that you can choose from already.
Yeah, it's awesome. That's a great way to avoid the next Bernie Madoff, I guess, in my opinion.
Yeah, I that's how I used to pitch it, like in 2016, 17. I even wrote a blog post about how Madoff could have been avoided with Melon, I think. I can't remember when, but it was years ago. So yeah, that's exactly it. And in terms of like, if you were like, I guess the only cost that would remain would be, I mean, DeFi is like a really gray area when it comes to regulation, but you get like the people who, you know, believe that or are comfortable just launching something without any kind of legal wrapper around it, and the other people that want to have something, and so they need to invest a few $1,000s in a legal solution or vehicle or, you know, company to have above the Melon fund. We don't take any, you know, we sort of we don't take any view on that. We let the user decide, but we definitely support people for whatever they want to do. And but still it comes out much less expensive than if you were doing it the traditional way, because the only fee that might occur to you is this legal overhead, but the fund administrator is non-existent. The blockchain is the custodian, the smart contracts is the fund administrator. The Melon protocol basically acts as your operations and admin team. So you've got nothing else left.
Cool, thank you, good stuff.
Cool. Yeah, so we talked about the features then that are coming with V2, I think. So maybe I'll just spend a couple of minutes talking about this announcement we made yesterday. I don't know if you guys are familiar with Rari Capital. Rari Capital are an automated strategy that work to get the best yields amongst all the DeFi protocols. And I think at the peak, they reached 90 million in TVL. And we've actually been speaking to them for a few months. And, you know, when we first met them, we said, hey, like Rari sounds like a really cool idea. Why don't you guys come and build it on Melon? But Melon V2 wasn't quite ready for them. So they just went and built it alone. And recently we reconnected with them. You know, we've been in touch ever since, but a few weeks ago, we reconnected with them and we said, well, you know, how are you guys doing with building both infrastructure and product is quite hard. Like we only do infrastructure and it's really hard. But I know for a fact, because I used to be in the kind of investment product business, that doing great products is also very, very hard. So how are you guys coping doing both? And they were like, well, yeah, you know, it's good, but, you know, and I said, well, why don't we reopen the discussion we had a few months ago, and we can see if we can, you know, find a way to work together. So long story short, we decided that we are going to partner together. And with V2 release, Rari will be migrating their liquidity over to the Melon protocol. And essentially what that means is that from now on, they will, after that, natively be building their strategies using Melon, which will be great for both parties. It will be great for Melon because it will be a huge boost to our TVL, which is just under 3 million today. But sort of if the sort of 60 million or so comes over from Rari, that's a massive boost. So people were really excited about that in our community yesterday. And for Rari, it's great news because I think they can move much, much faster than they would otherwise if they were just building the infrastructure alone, but rather now we merge teams, and for the first few months we work in parallel, but the idea would be that in 6 to 12 months, they basically focus solely on product and we focus solely on the infrastructure, which frees them from the maintenance and upgrade burden and enables them to focus entirely on building their product and scaling their product. And from our side, it enables a real use case that we're really excited about, and obviously building something in sync with a real kind of user who's already proven some success will be really kind of useful for us as a learning curve of what people want. So that's how the kind of partnership will work. As a kind of way to get our two communities excited, we also announced that we're going to be doing a small airdrop of Rari Melon tokens to our kind of opposite communities so that they have some stake and skin in the game. And yeah, and we're basically starting work on this pretty much immediately, and this should be kind of coming into fruition with V2. So we're super, super excited, not just because we really like the Rari team and we're really excited about what they're building, but also because it proves quite nicely that Melon is flexible, modular, and can be used for lots of different things, including these kind of awesome DeFi strategies that are emerging recently. So yeah, so I think that's almost all the things I was going to talk about. I think it's probably worth just mentioning because it's coming tomorrow anyway, but we're, as some of you might know, we have been in a bit of a legal battle with BNY Melon on and off for the last couple of years. And so we've just decided that it's not worth our time or energy anymore. And we've decided that we will rebrand the protocol. So starting, you'll kind of see it phase in gradually starting tomorrow, but starting tomorrow, we will be rebranding our social media to Enzyme Finance. So you can, if you are following us or if you're not following us, just know that, because it might be confusing to people at the start. We're super excited about the rebrand. Actually, like once we decided we were gonna do it, we were like, okay, well, let's turn this into a positive event. We never actually really had the first kind of logo was when Reto and I co-founded Melonport. I think it was like an extremely 99 designs, like really cheap. Nothing wrong with 99 designs, by the way, but I think it was like a little competition we ran on 99 designs and it cost us $300. So it wasn't really much about thinking about our vision and our values, and so I'm really excited about this one because I think we put a lot more work into it as the council, and maybe just in terms of things coming up to be looking out for. We have plans to launch our testnet next week. So if any of you want access, just feel free to DM me. I'm on Telegram. Actually, this is going to be on YouTube, so you can just get my contact details from Juan and message me. But yeah, we'll make sure we give you private testnet beta into the holidays. And we are coming to the end of our audits, multiple audits at the end of this week. We've actually been doing 2 formal audits over the last 8 weeks in parallel and 2 informal audits. So we'll have a total of 4 audits by this Friday, hopefully. And we try to emphasize security and in everything we do. So it takes us longer to roll things out, but I would say that they're more in production than testing in production. Basically, we're still planning to do the main net release. We were planning to do it just before Christmas, but we're actually going to push that back. We're about to announce that tonight. until mid-Jan, because we don't want to do a release right before the holidays. So you can look out for the mainnet release in middle of Jan. And that will give us a week or two before when we come back from holidays, just to, fix up any kind of feedback that has been reported over the holidays from the testnet. And then in January, once we've released, we're going to probably announce our new kind of roadmap. The cool thing about post V2 is with the new architecture, I think our release cycles will become a lot shorter, because the big kind of re-architecting and rebuilding work has been done, and it's been a construction site for the last year. But I think from now on, integrations with the new architecture, integrations will be much faster and much easier, and we should be able to roll them out at a much faster pace than we had been able to previously. So yeah, I think that's pretty much all I wanted to cover today, but I'm also happy to take any more questions.
I have one actually. Do you guys offer like a white label solution? So if someone would like to use you in the back, would they need to start building something on top, or is it like just add your logo, your name, and you're ready to go?
Yeah, so we are very happy for people to white label Melon, and we have the JavaScript library which actually tells people how to do that. Gorilla Funds kind of helped with that to some extent, but we don't have it as a service, like we don't provide it as a service, but we have documentation that enables people to do that, and our team is always happy to help anyone doing that. So yeah, that's a good point, and we really love to see it being white labeled actually. So if anyone is interested, that please, just contact us. We'd be very happy to see it happen.
Nice. Are there any other questions, guys? I don't want to monopolize the microphone. Okay, I wanted to ask you more about I don't know if you mentioned it, about your fees as the protocol. Like, what's the business model? How do you guys make money? I imagine you take like a percentage or something.
Yeah, it's a really good question, because it's also something that's very topical right now. So we started off having this concept of a fund setup fee and a fee when someone invests in the fund. It's like a one-off fee, both of them. And the idea is that the fee was like converted into Melon and then burnt. So it's a buy and burn model. Quite similar, I guess, to Maker. So you guys are familiar with that. But the feeling from the community was that people wanted to see a more assets under management based model that directly links the assets under management growth to the value of the token, rather than the number of funds growth to the value of the token. And I thought it was interesting that earlier this year, we had a Melon improvement proposal made by Tom Shaughnessy from Delphi Digital, Ceteris Paribus, and Chris Meneses from Moonchain Capital. And they put forward a really strong case for why we, how we could kind of re-architect the tokenomics to be more AUM based and really capture the growth. They modeled it. They showed their points in a very nice and kind of consistent way. And Melon Council has a working group for tokenomics, and we've been discussing it back and forth for a while. And they approved it very recently. Now the question is just in terms of what would be the best implementation. Like, obviously, there are different ways we can implement it, and we've just done a huge exercise in terms of making the code base as lean as possible. So we don't want to back in and add layers of huge complexity. So we're exploring and scoping different ways we can implement it right now. And the idea would be that this will not be included in V2, but it will probably be included kind of very soon afterwards. So yeah, that's actually quite an exciting change we're making. And I realized that just now that I also forgot to kind of introduce who I'm speaking on behalf of, because I have obviously wearing the Melon Council hat, but you asked me, Juan, also at the beginning, who's building on Melon, and I also forgot to mention that we are building on Melon, like my second company. So after dissolving Melon Port, I took some time off, and we came back together like at the end of last year and decided that with all the cool stuff happening in DeFi, there was a lot more we could do with Melon. And so we made a proposal to the Melon Council to become the lead developer, and they accepted. And so Avantgarde Core is who I'm kind of representing, I guess, these days. And we are the lead developer for the Melon protocol. We're a team of 11 or 12 people now. And we're basically one of the teams receiving tokens in exchange for delivering work on the protocol. And we are in the process of delivering a 3-year roadmap. But this time the roadmap is not fixed in stone like it was the first time, because we learned from V1 that the space moves so quickly, you should never fix the roadmap in stone. And so we, the roadmap is changing, but we're delivering it as expected, and we have two more years to go.
Nice, congrats on that.
Thanks.
I'm leaving like a little bit of silent space to see if anyone wants to jump in. All right, I'm jumping to my next question. Regarding portfolio rebalancing, how do you guys manage that? Is it something that happens whenever there's a huge drift from the target average, or the portfolio manager needs to actively rebalance? How does it work?
Yeah, so the default is that the portfolio manager has to actively rebalance. So like I think I have said this like a few times now, but I really, if there's one takeaway I want people to leave with today, it's like how flexible and customizable Melon is. So it's not just designed for one type of fund or one type of strategy or one type of person. It's really very flexible and customizable. So you could use it to launch an ETF. You could use it to launch a discretionary strategy. You could launch it to run an autonomous strategy, et cetera, And so you would just, at the setup phase, you would just be picking different things from the interface, from the menu to make your product, right? So with ETFs, they are currently not by default automatically rebalanced. So you would have to write a bot to automatically rebalance if that's what you wanted. Or you could do something, you could choose a policy that we've written, for example, and you could queue up your investments until you decide you want to execute them. And then you could rebalance everything in one go. So therefore your portfolio is never left unbalanced because of incoming investments, right? So that's kind of some of the features we have to enable for passive strategies. And then for discretionary, it's like just by default, you just buy and sell when you think it's the right time to buy and sell.
Nice, interesting. Yeah, I guess that the answer is it's very flexible. Use the JavaScript library and stop asking any more questions about this. But
no, it's okay. I mean, it's a bit different because like most other kind of DeFi protocols are autonomous and automated, right? So it's kind of easy to imagine that that's what Melon is by default. But we're, I guess like another difference is we're really trying to be infrastructure, and to be infrastructure, you have to be flexible enough to be able to cater for all the use cases.
So I guess my expectation was to be a little bit more strict because of the smart contract part of things. So I'm having a hard time to reconcile JavaScript with smart contract and the flexibility with the everything's on chain and very reactive kind of thing. That's where I'm struggling. But
so it's not that. So all it means is that your strategy stays off chain. So the factors that go into deciding why you buy or sell something stay off chain, and I think that's a good thing, because otherwise people will copy or front run you. Yeah. So if they don't know why you're buying or selling something, they have no reason, or how are you getting the signal? They can't copy it or they can't copy it easily. So the idea is to keep that off chain, but once a signal is triggered off chain, it enforces the trade, like it submits the trade. So it's You could run a completely on-chain strategy, and we will support that too. But it's just not, you just have to be aware that if it's on-chain, then people can easily front run or understand your strategy immediately.
Makes sense. No, if it's off-chain, then I'm less reluctant.
Yeah, exactly.
Okay. Guys, do you have any other questions for Mona?
I had a quick question. Did you have like a timeline goal in terms of collateralization with Maker? Like it seemed to me that the market cap for the Melon token is probably a little small right now, but that's also seems like it's pretty tied into the growth of the protocol. So is there like a timeline you're shooting for?
So Patron is referring, Mona, to
Um,
potentially using the token as a collateral type to mint DAI.
Yeah, it's not something we have. It's not something that's currently on the roadmap, but it's probably something we could and should discuss as a council. But it's not something that has come up yet. But it's a good idea. Like, you know, we should definitely be discussing it at the very least.
Also, maybe connecting into Maker to have leverage in the strategies, right? So if I don't know, if one of the strategies includes one of the collateral types that Maker currently supports, potentially the asset manager could use Maker to cycle the collateral type and use leverage for that.
Yeah, definitely. Yeah. This is, like I say, like with the new architecture, all these integrations become much easier.
Totally. All right. So
Would
Mona,
that qualify? Sorry, Juan. I was going to say, does that qualify MKR holders as for an airdrop there, like Rari?
at least for the ones attending this call.
You're gonna have to work harder than that for an airdrop. But yeah, no, like yeah, it'd be really cool to, you know, hear your feedback. If you guys have a chance to check it out, we'd love to hear from you. And we're huge fans of DAI. I recently tweeted about this, but I do think kind of custodial based stable coins, you know, they pose a really big risk, a systemic risk to DeFi. So I'm a big fan in DAI kind of denominated funds for sure. So yeah, I hope that we see a lot of them with V2, and I'm sure our users will be very happy too, because I'm sure it's much easier to outperform DAI in 21 than it is to outperform Ether.
Nice. So Mona, where can people find you?
Yeah, so you can follow us on Avantgarde Fi or well, starting tomorrow at Enzyme Finance on Twitter. It's today at Melon Protocol, tomorrow at Enzyme Finance, and same on Medium, etc. It's all gonna change to Enzyme. So yeah, in the meantime, if you want to join our Telegram channel, I can probably post the link here as well. I think we've already changed that. But yeah, we'd love to hear from you all.
Sounds good. All right. Thank you for coming, Mona. It was great having you. Thank you all for coming. And next week we're going to have real world assets coming over. So the whole working group, Lucas from Centrifuge will be here, and there will be 3 projects presenting: Harbor Trade Credit, People's Company, and FortunaFi. So join us next week at this same time, and have a great week, everyone. Thank you.